Well, greetings and salutations, test takers. Those of you taking the 63 and more importantly, 65 and 66. It's all of the Uniform Securities Act about registration. Registration of the security, registration of the persons, natural or unnatural, all that kind of stuff. I'm here with Sasha every Tuesday night at the close of our live stream. We do a drawing for coaching call. Sasha's the winner. And so what she wants to talk about in her 30-minute coaching call, we'll see, we can't go too far over, but we'll see what we can get done in terms of answering some questions for her. And if you would like to have an opportunity to win the drawing, you can join us Tuesday night. I can't make you stay at 5 till 6. I think people are cheating. I think some people, Sasha, are showing up at 6 just for the drawing, but we'll see.
Oh, no.
All right. All right. So registration of investment advisors. Now, first major test point. I'm never registering my investment advisory firm. No, the firm. You gotta be careful on these questions about, are they asking about an unnatural person? An unnatural person is not a living, breathing human being walking planet Earth. Your firm is an unnatural person. Are they asking you about the investment advisor rep? That is a living, breathing human being walking planet Earth. That will be you once you pass your 66. Right? So that's the first thing. And the cast of characters, be clear who you're being asked about. We are never going to register the investment advisory firm with both the SEC and the state. It is one or the other, never both. I have a very popular lecture on this called Who's Your Daddy? It's either the SEC or state. Now, if they say on the test, state or states, that means, again, it's state, because again, federal is not going to do that. So we're going to define an investment advisor. Who is an investment advisor? Because the point is, if you is one, then you're going to have to register. Right. So that's our first thing we're going to be talking about. And then we're going to say, okay, if you is one, who are you registering with, the SEC or the state? And, there are some people that are excluded from this and some people that are not. Okay, so investment advisors. I think a good way to get this is with the ABC test. Do you give investment advice? Do you tell people, Sasha, I'm in the business of giving investment advice? And do I want compensation for doing so? If I answer yes to that three-pronged test, ABC, I'm an investment advisor. And that means I'm going to have to register with either the SEC or the state. There's our ABC. I just made a little short today where ABC is on all the tests, right? Agent, broker, commission, A shares, B shares, C shares, and here ABC. So principal business giving investment advice, a substantial part of your business. Again, they don't make a distinction here about, if you're in the business. If a piece of your business is doing this as a business, and you're gonna have to register. So if I'm like for example, sports agent, I negotiate your contract, period, full stop. I'm not an investment advisor. But if I say, hey, now that I've got you all this money, why don't I help you manage it? That means I'm going to have to register. So a lot of people ask Sasha, I'm not sure I is one. Because a lot of people don't want to embrace the spirit of having to get registered. And so be careful when you ask the SEC for an interpretation. The SEC has jurisdiction, interpretation, and enforcement of the domestic securities laws of the United States of America. And so financial planners and agents and pension consultants said to the SEC, we're not sure if we meet that definition. And the SEC said to financial planners, do you give investment advice? And financial planners said yes. They said, are you in the business of giving financial advice? And financial planners said yes. Do you get compensated for those financial plans? And they said yes. And then they said, okay, so you are an investment advisor, need to be registered as such. Now, I told you this one can be a little tricky. Do you give investment advice? Now, there are some sports agents that do and some that do not. I say, Sasha, I don't give investment advice. I just negotiate your contract. Or I say, yeah, most agents now, agencies will do both. I just saw LeBron the other day. He was working out with a 16-year-old high school basketball player. And I thought, how in the world does this guy end up working out with LeBron? Well, come to find out, Clutch Sports, which is a sports agency that LeBron owns with, Rich Paul, they want the kid to sign with him. Man, 16 years old. I've never heard of the kid, but he must be really good. If 16, is LeBron's Bronny is and had a cardiac arrest, and LeBron's still out there on the floor, working out with the guy. Now, Clutch Sports not only wants to negotiate your contracts, they want to manage your money for you. They want to take care of your cradle to grave. So they're going to have to register. Pension consultants. They said, do you give investment advice? And they said, yeah, but we're paid by third parties. The SEC says we don't care. You need to register. So this is called SEC Release 1092. And this is what made these people have to register as investment advisors. Who's not an investment advisor? Who doesn't need to register? So, the point is, again, registration. Great memory aid. I wish we had more memory aids for 65 and 63 and 66. And unfortunately, we don't. But one great memory aid here is lawyer, accountant, teachers, and engineers. And the key word here, it's all about these pivot words. And the key word here is the advice I'm giving is incidental. If the advice I'm giving is incidental, then I don't need to register. So as a lawyer, maybe I win as a personal injury award. So we win $300 million, 100 million for me, 200 million for you, Sasha. And you say, Dean, do you know anything about money? I said, well, Sasha, you're probably not surprised that a guy like me who handles lots of money probably does have some, advice. But I'm not in the business of giving investment advice. But what I think you might want to consider is a variable annuity. No, I just gave you investment advice. It was incidental. I didn't charge for it. You have the expectation, that I'm not an investment professional. I'm an attorney. By the way, I get all kinds of attorneys in class because once they cross that line, they start charging for it. Well, then they got to get registered, right? So you could lose this, this thing. An accountant, I say, Sasha, I'm going to reflect on your tax return that you're funding an IRA. So I'm going to reflect that you're going to fund that for $6,500. So you need to open an IRA, you need to put $6,500 in it. And you need to buy a mutual fund. It would be my recommendation to you. Again, I didn't charge you for that. Now, that's quite different, by the way. If the accountant says, let me put on my investment professional ad, there are accountants now that, sell investments. That's a different deal. I have a friend, Clarice. She thinks of me as a teacher. I feel honored that she thinks of me as a teacher. I don't sometimes think of myself as a teacher, but sometimes I do. And I think it's a calling. And anyway, she's worked very, very hard to accumulate for her a lot of money, $4,000. And she said, Dean, what do you think I should do with this $4,000? I said, do you have the time, temperament, expertise to be managing money? She said, well, God, no. I said, well, then you ought to hire a professional manager. And Clarice said, I can hire a professional manager for as little as $4,000. I said, Clarice, there are men and women who've sold their soul to manage that $4,000 for you. You should buy a mutual fund. I just gave her investment advice. Now, she sought that investment advice for me because I'm a teacher. Please note, I didn't charge her for the investment advice. I didn't say I'm an investment professional. The advice here, all these scenarios I'm giving you are incidental. These are people giving investment advice, but it's not their business. They're not receiving compensation. I'm an engineer and I say, hey, listen, we are going to need to raise a lot of money to build this dam or build this airport. What I think we should do is issue some bonds. That would be my advice to you, is we issue some bonds. Let's call my guys at Goldman Sachs, see what they can do for us. If I'm an engineering firm and I'm building billion-dollar oil refineries or airports or dams, I probably have, again, a little bit idea about how to finance things. I have some stuff on investments. Now, I've seen engineering firms that set up subsidiaries to say, if you don't hire us to build it, you can hire us to help you finance it. And then again, they have to get registered. Once you cross this line, you're going to have to get registered. So late is a good way to remember that. Incidental, I told you the key word. Now, remember, you are not. I think one of the biggest things you got to be able to do is get down on your 66, the cast of characters. You, Sasha, are not an investment advisor. Are we clear? You are an investment advisor representative. That's important that you read the question carefully. RTFQ. Investment advisor representatives are not investment advisors. Now, you're an investment advisor rep of either a federally covered investment advisor or a state covered advisor. And again, Sasha, on the test, you got to be real careful about, are you an investment advisor representative of a federally covered investment advisor? Or are you a investment advisor of a state? Because again, the answers will be different. Right? So you're not an investment advisor, you're an investment advisor rep. For example, before we started our coaching call, you said, Dean, I keep getting these questions about state A and state B and state C. Yeah. And Sasha, boy, if you're an investment advisor rep of a federally covered advisor, it doesn't matter. It does not matter how many states they give me in the question. If you're a investment advisor rep of a federally covered advisor, Sasha, pretty straightforward. You only have to register in a state in which you have a place of business, period, full stop. You could have 1,000 customers in state D and you don't need to register. And you don't have to worry about de minimis. So boy, it's that state stuff that becomes messy. So bank savings institution, trust companies, again, in a local community as a banker in the Kiwanis Club, I might be the most sophisticated guy, particularly if it's a rural community. And, again, I'm not giving investment advice professionally. I don't have a subsidiary doing that. I'm just at the Kiwanis or Rotary Club, and somebody asked me as a banker what they should do. And I say, you should buy a mutual fund. In a trust company, we're giving investment advice. We're not charging for it is the key. So these are people that kind of sometimes look like that, but are not. Broker dealers aren't investment advisors. So, Sasha, broker dealers get paid for transactions, not relationships. Investment advisor firms get paid for the relationship. They get paid a percentage of assets under management. Whereas broker dealers get paid for transactions. Now, if I'm an agent of a broker dealer, I say, Sasha, I have a 7 and a 63, or I have a 6 and 63. I don't have a 65. I don't have a 66. I'm just an agent of the broker dealer. This is how we did business for many, many, many years. I say, Sasha, as a traditional stockbroker, how it works is you don't pay me for the relationship. The relationship is free. As part of that relationship, sometimes I'm going to tell you to buy or sell a security. And when you do so, my broker dealer will make a commission or a markup or a markdown. And then I, as an agent, get paid a portion of that. So the investment advice I give you is free. You're not paying me for the investment advice. I make my money when you implement the investment advice. So traditional 663, I say, Sasha, you ought to buy a mutual fund. You say, where you can get a mutual fund? I say, well, Sasha, as a matter of fact, you can get it from me. I'm a 663 and I have a broker dealer, and you can put $100,000 in that mutual fund. My firm makes $4,000 and I get a portion of that. That's a traditional broker dealer kind of model. And you might say, well, Dean, I'm not comfortable with that. I said, well, why not? You said, well, you might tell me to do something even though it's not in my best interest. I said, well, I hope not, Sasha. But hey, if you want, did I tell you I'm duly registered? I'm not only the agent of a broker dealer, I'm also the investment advisor representative of an investment advisory firm. And so if you want, we can wrap our products and services into a fee. Most people are taking 66s and 65s because they want to sell wrap accounts. Now, a general circulation newspaper does give investment advice. I think the Wall Street Journal, New York Times are excellent. In fact, sometimes I'll post a great article in social media for test takers saying, check out this article on the difference between 529s and Coverdales, or check out this article in the Wall Street Journal today about tax saving devices. Now, again, they don't need to register because the information they're giving is one being given in a general circulation newspaper. You don't buy the Wall Street Journal or New York Times to get rich, right? It's general circulation. Secondly, they don't charge for it, right? So the publisher of a newspaper, column, or newsletter can give investment advice and not have to register. Now, that's quite different, Sasha, than if I'm publishing Dean Tinney's microcap Maven newsletter. It's $1,000, and I tell you what securities to buy or sell. Well, that's an entirely different thing. And I'm certainly going to have to register as an investment advisor. So again, we're talking about exemptions here from registering. And so here we're saying you don't have to register with the SEC so federal exemptions from advisor registration. So the SEC says, why don't we know about you? And I said, well, I'm an interstate advisor. I only advise within the state of California. I only give advice to insurance companies. Now, would I want you, Sasha, to know everything on the test? The answer is yes. But if you can't know everything, please stay focused on the state. Because the Uniform Securities Act, remember, is the template that you're being tested on. It is the state administrators that are making you take this test. So what I'm saying is, yeah, would I like you to know that federal's 1,200 and state's 500? Yeah. But the 500 is more important as a test taker. It's more important to stay focused on the state stuff. So exempt from the state. A person have no place of business in the state. So I'm telling, I'm coming to you from Nevada. Let's say I'm a state covered investment advisor. I have a place of business in Nevada, and I have no place of business in California. And California says, by the way, when we started this discussion, you were asking about state A, B, and Z. One thing I think you should do is to give the states names. So what I like to do is, in terms of the poor grammar on the exam, and I'd be the first to say that NASA exams have very poor grammar. One thing you can do to kind of drain that a little bit, that swamp, is to say, okay, when they say investment advisor, I'm going to say my firm. But when they say investment advisor rep, I'm going to say it's me. And when they say state A, I'm just going to call it Illinois, or I'm going to call it New York, whatever states I'm familiar with geography-wise, right? So I'm going to say, okay, Nevada. And then if they say contiguous state, I say, okay, well, that would be California or Arizona. Sometimes that can be helpful in trying to figure out what's going on. So I tell the state of California in my example that I'm only doing business with other investment advisors in California. And that makes sense because, they're supposed to protect their own interests, their own assets. These rules are designed to protect retail investors in California, not investment advisors in California, right? So again, I'm not doing business with retail people. I'm only doing the business with broker dealers. Again, a broker dealer should be capable of protecting their own interests. Right? What's missing here is a retail investor. I'm only doing business with financial institutions. So far, what I'm telling the state administrator of California that I don't have any retail clients in his state, and I have no place of business in his state. Neener, neener, neener. I don't suggest you say that. That might make them mad. So snowbirds, I say, listen, I'm calling on my clients who vacation in San Diego. They are residents of Nevada. They are not residents of California. They're snowbirds. They're just trying to get out of the heat or get out of the snow, whatever the case may be. And they are protected by the state administrator of Nevada. They don't need your protection because they're not residents of your state. In my example, the state of California. My customers are employee benefits plans with at least $1 million. And again, the idea here is these employee benefit plans have the resources to protect their own interests, their own assets. Okay, so investment advisors do not include. So first thing I would tell you is that you got to be real careful again about the cast of characters, because remember, if I'm a federally covered investment advisor, I don't need de minimis to operate anywhere. And if I'm an investment advisor rep of a federally covered advisor, I don't need de minimis to do anything. It's only de minimis is Latin for it's so small, who cares? And de minimis is only about the state. It's about the state, right? So now California says, well, Dean, you do have retail clients in California. I said, I do. And you have no place of business? I said, I do not. And they said, well, now, okay, well, then how come you didn't register? I said, well, I'm using de minimis. I have a maximum of 5 retail clients. So if I'm an investment advisor, state covered in Nevada, I have no place of business in California, I could have a maximum of 5 retail customers. Now, remember, this is only state. Now, be careful too, Sasha. You got to be real careful. Broker dealers don't have de minimis. If this is a question about broker dealer and I got 1 customer in California, that broker dealer has to register. If I have a single retail investor in California on the broker dealer side, the broker dealer must register. So that's why it's so important to read carefully and say, okay, are they asking me about a broker dealer? Because there is no de minimis for a broker dealer. Or are they asking me about an investment advisor? And then again, investment advisor, federally covered, I don't need to worry about any of this. It's state. And that's going to be during a 12-month period. Right. And remember, that's only for state covered advisors. Again, we're saying, does a state covered advisor covered in Nevada register with the state of Nevada have to register in California? And the answer is no, if they don't have a place of business and they don't have more than five persons. Now, remember, persons here means living, breathing human beings. Private fund advisor, I wouldn't worry about this at all as a test issue. Again, you have no retail customers. And I wouldn't worry about that as all as a test thing. So once we've decided we're a registered investment advisor, how do we register? And remember, we said we're either registering with the SEC or we're registering with the state, never both. Never, ever both. So the National Securities Market Improvement Act, NSMIA, was not well received by state administrators. And, Sasha, when it took power away from state administrators, and it established 2 buckets. One bucket of what we call federally covered securities. These are securities that don't need to be registered under the Uniform Securities Act. Very testable. Those are New York Stock Exchange securities, NASDAQ securities, mutual funds, and Reg D private placements. So, if that's what I'm selling, I don't have to coordinate that with the state administrator. I don't have to qualify it. I don't have to register. So the state administrator said, Dean, why didn't you register the security? I said, it was federally covered. And the other bucket that it established, which we're talking about now, is a category called federally covered investment advisors. As a federally covered advisor, I go, before we have NSMIA, I go, this is ridiculous. I got to jump through 50 different hoops in 50 different states as an investment advisor, because that's what it used to be. And if I can qualify to be federally covered, that's, certainly what I want to do, because that's so much easier. So NSMIA was enacted to eliminate the conflict between federal and state. As I said, it creates for us 2 buckets: federally covered securities and federally covered investment advisors. And again, I told you, state administrators aren't big fans of this. I joke, Sasha, the SEC is God and state administrators think they are. So they're 50 demigods running around. And so states can't require registration of securities, transactions, or investment advisors covered by federal legislation. Now, the piece of that we're discussing presently is this idea that states cannot require registration of an investment advisor who's registered with the SEC. So remember, we're either going to register with the SEC or states, never both. Now, again, you got to be real careful. Broker dealers do register with the SEC and states. Broker dealers are completely different in terms of this. I told you, broker dealers, 1 retail customer. Broker dealers, have to register in the state in which they have any retail investors. So they do register with both, but not investment advisors. So very testable. If we have assets under management of 110 million or more, we are a federally covered investment advisor. Under 100 million, we belong to the state. I can't tell you, Sasha, how many state advisors work so hard to get to 100 million. because as I said, the regulatory burden being federally covered is just a lot less. And so if you're 100 million or more, you get to choose. Now, Sasha, I don't know if any investment advisor would ever choose, given the choice, to be a state. I mean, I just don't, why would you do that? And there's all kinds of, more rules to be state than to be federally covered. Right? Register at the state or federal level, as we said, never, ever both. It's one or the other. Now, by the way, when you said, Sasha, when you get questions about an investment advisor registered in state A and B, well, then you know they're not federally covered because they wouldn't even be doing that, right? You're federally covered, you're done. You're done. So we said here, if you're going to register with the SEC, you have to meet certain AUM. And again, there's other exceptions to this. So if I'm also just giving advice to investment companies, mutual funds, I can be federally covered. I think it's almost worth just being that. And then this is the burden where we say, if I would have to register in 15 or more states, I can say that is so onerous that I'm federally covered. So this is another way to be federally covered without actually having the 100 million. I say, I would have to register in 15 or more states. That's ridiculous. That's too onerous. So I am federally covered. So these are ways to be federally covered without having the 100 million. You give advice to mutual fund companies, or you would have to register in 15 or more states. Okay, so financial requirements. The financial requirements as well are on the state level. There's not a standard for financial requirements to be a federally covered investment advisor. Books and record keeping are different than broker dealers. So it's really huge. Every time you get a question, say, is this about a broker dealer or is this about investment advisors? And then they have a responsibility to make sure their reps are adequately supervised. So here, the application we submit to be an investment advisor is Form ADV Part 1A and Part B. And, they're going to ask us, what kind of business we want to be. Do we want to be an LLC? Do we want to be an S Corp or C Corp? Subchapter S, how are we organizing our investment advisory firm? This is very testable. All participants, we're talking about the firm right now, but all participants, broker dealers, agents of broker dealers, investment advisor reps have to have consent to service. And do you know what this means based on your pre-study? This means, Sasha, that I can serve the state administrator and you're considered served. Right? So this allows the state administrator, very testable, to accept legal documents on your behalf. So I say, Sasha, you can't serve me, you can't find me. I'm in Ensenada, having margaritas. And you say, well, Dean, I don't need to find you. I can just serve the state administrator and you're considered served. You have to pay a filing fee. Record keeping on the investment advisory side is 5 years. So again, it's important you distinguish whether you're being asked about a broker dealer or an investment advisory firm. Readily accessible, regulators love this, Sasha. I'll be back tomorrow, 12:30. Expect you to have the record. Right, so 24 hours is what readily accessible means. That makes sense, right? I'll see you at the same time tomorrow. You better have it. Now, on the state level, there may be a financial requirement. And the net worth for an investment advisor on the state side is going to be $10,000 if they have discretion but not custody. So, Sasha, my investment advisory firm, I used to say, Sasha, I can't steal what I don't touch. I don't have your monies and securities. Your money securities, Sasha, are at Schwab. And what I have is trading authorization on your account. I call Schwab and I tell them to buy or sell things in your account. So my firm is going to be 10 grand. If I actually have custody of your monies and securities, then it's 35 grand. And if you have the sufficient net worth, you're not going to have surety bond. You have to pass exams, written and or oral. And be careful, when you pass your 66, your registration is not effective. You know, I say, hey, Sasha, I'm looking to see if you're effective in this particular state. And usually I'll be noon of the 30th day if we don't hear differently. If you withdraw your registration as an investment advisor, that's effective on the 30th day as well. 60th day on federal. Now, what did I tell you? Would I like you to know everything? The answer is yes. But if you can't know everything, what's more important as a test taker, state or Fed? The state. The state is always more important, right, in terms of passing. I'm not saying you should know federal stuff. I'm just saying it's more important. A successor firm. So if we have a successor firm, we file a new application, but we don't have to file additional filing fee. So, you know, if I buy an investment advisory firm out, I'm firm A, I buy out firm B, and it's November, I make a new application of form ADV, but I don't have to pay additional fees. Okay, well, that's 30 minutes. We got through the investment advisor. Let's talk about what we didn't do. So in terms of what would be missing here is we didn't do registration of an investment advisor rep. That's going to be you. We didn't do registration of the broker dealer, and we didn't do registration of the agent of the broker dealer. Now, I don't know if it's helpful. You know, I don't want to sound negative vibes, but when most people miss their mark, it's not the registration stuff. It's the investment stuff. And I think there's a little bit of hubris. I think, you know, people go, oh, I just got my 7, man. What can they ask me about a mutual fund? I don't know. You'd be surprised. Right? So make sure you pay attention to that investment advisory stuff or the investment vehicle stuff, mutual funds. There's a little more of the analytical kind of methods kind of stuff as well. So good news. I know you're working on this part of it. But, you know, registration, maybe 2-3 questions on what we just discussed. You know, maybe 4 if you throw in the investment advisory side. So it's not going to be material. So let's say we didn't get this fixed with remediation between now and test time. Okay. And you say you missed your mark because of registration of broker dealers, agents of broker dealers, investment advisor reps. I'd say, you had some bigger problems elsewhere. But you certainly want to do that. Have you done any practice finals yet?
No, I'm actually, so through Past Perfect, I'm on